Hey, welcome everybody to a special Friday show. A little darker around here. It's been raining all day. I hope you guys enjoying some good weather where you're at. Actually, I've been saying all week that I might come in and well, got my hoodie on as if it's cold in Florida. It's a little chilly, but I've been saying that I'd probably come in on Friday here, just hang out with you guys, maybe answer some questions, try to share something new with you, and I got a good one for you here today. We're going to go over some data. How do you analyze data? And we're going to go over a real simple example. I'm going to ask a question. Let's see what your answers would be, right? And so we'll see how that goes. And of course, I'll stick around and answer questions if you have any. Also, I wanted to take a moment and just kind of point out how we do things here at Jazz. Got a lot of people joining us here lately as we go through our wait list. And usually, well, in the past, I would have done frequent classes just to kind of, publicly just to say, hey, this is what to expect if you're going to join us. So I'm going to cover that as well. First, the Roth IRA gets the shaft, man. Roth IRA, they didn't raise the limit, right? So they just came out with it overnight, published their new sort of announcement this overnight. And the limit for 2022 in the Roth IRA is still $6,000, $7,000 if you're over 50. Only the 401k got a bump to $20,500 from $19,500. So a little bump there. But I think the Roth IRA and the IRA should have got a bump as well. It's supposed to be sort of tracking inflation. We know inflation's going up. Come on, what's going on there? I think they kind of got the shaft. So what I'm going to start working on is actually an interesting study where we want to measure the tax efficiency of the Roth IRA based on your age against the taxable account. It is looking more and more like the taxable account is more beneficial to certain people than it is the Roth IRA. Obviously, the younger you are, the Roth IRA becomes more important. But if you're starting to get into your mid-30s, late 30s, mid-40s, late 40s, anywhere in that range, at what point does the tax efficiency curve cross over and you're better off just starting an individual account anyways? So I'm likely going to do a whole bunch of videos on that, or just a series or a longer video just to kind of cover that, because there's some really cool data that we can analyze there. So when somebody says, should I have a traditional IRA or a Roth IRA? The answer very well could be you should have an individual account, right? We've come to that point based on where inflation's at, how much money you can have in there, the rules they're changing on these things, and possibly your age and income. So I promise you it won't be something you've ever seen anywhere else. Probably never analyzed for the general public. So we're going to work on that as well. All right, real quick, I don't want to make this a sales pitch. I just want to let you know what to expect. If you have recently joined our wait list and you've been invited to join, I want to give you an idea of what to expect and everything going forward. Or if you're thinking about it and you're just like, hey, I don't know if these weirdos are good for me, I'm going to actually go through it. So the first thing we always do is we invest. So when you open up your account, you're opening your account and it's yours. We can't touch it. We can only invest for you. We can't take your dollars and spend them on Lucky Louie over here or something. So when we see dollars hit your account, we get an alert, we go to work. I'll always start investing generally for you. So if you see your account come to life and you're like, wait a minute, I haven't even talked to the guy yet, or they don't know anything about me, I always start generally just to make everything start to work. The next step after that is to work on the initial plan. So I could never possibly get it right for all of you in the very first shot at coming up with a plan. So I say, hey, help me out to learn a little bit more about you so I can create an actual rough draft plan. Everybody's a little bit different, so I go through that. I'll tell you how much you need to save each year. Why did we come to that number? We're going to include Social Security, other income, all the stuff you want to put in there. We'll factor all that in, taxes both now and in the future. And I try to make it simple, so it's just an email response where I type everything out, and I really do, type them all out. And I'll just say, look, let's make it simple. This is what you need to do to hit these goals. What do you think? What don't I know about you now? Or what do you want to change? And so that's the second step. Also, what that allows me to do is go, hey, if you're just kind of testing us out here, that's fine. People do it. If you're testing us out and you put in 5,000, but I find out you're worth 5 million, well, then it allows me to say, okay, in your account here, I could be aggressive. I'm not going to ruin your life if we're going to be aggressive, right? And I could start to help with other things. The third step is starting to help with 401ks, workplace plans that you can't move. That's respectable. I still help on that. I think we're the only advisor that does that, even though we don't make anything off of it and we don't actually have control over that account. I still want to help because it's a part of the big picture there, and I think it's actually should be mandatory that you do that. So that's step 3. Now, along the way is step 4. So you come to our weekly classes on Thursday, Wine and Wealth. Every Thursday we do it. We just did one last night. Every Saturday I actually type out an email. It's not an automatic thing. It's not like pre-populated with information like all these other advisors. I actually type it out. I tell you what's happening, what's going on, something new, maybe a lesson or a review of everything that we did in the week. And the goal is to always be in front of you. So every Thursday you're going to hear from me. Every Saturday you're going to hear from me. And I'm trying to get you to ask questions. At some point, we will stop taking clients and we'll just focus on who we have here permanently. And I will just help with that. But for now, I want every client to ask questions. I want to say something that causes you to go, wait, that might be me, right? Or does that apply to me? Can we do this? And so that's the goal. So that's why every Thursday, every Saturday, I'm out there in front of you. And of course, you can follow along and participate. Now, you also will have access to our calendar, our phone call calendar, right? So if you say, this is complicated, I want to talk about it, you can actually do that. We don't stop you from scheduling calls. You can schedule as many as you'd like. And we're obviously happy to help you. You go inside your personal portal, the dojo, you can actually see around and do everything inside of there. I'll show you some of it here in a minute, but everything that you want to see is inside of there, along with the classes, research, archives, and all that great stuff. So that's really it. That's all I wanted to say. That's kind of us in a nutshell. We really don't have any games to play. There's no gotchas. There's no, oh, I forgot to tell you this. If there's anything I forgot to tell you, it's only to add to the sort of services that we offer. There's no extra fees, no charges. Our funds don't have costs. There's no commissions. There's no, hey, because it's Friday, you have to pay us. Or there's no fees for wire transfers. If you want to do a wire transfer, there's no fees for checks. We don't do any of that stuff. So there's no cost there, and we're not going to rip you off, right? Enough with the games already, man. And if you want to know more, of course, you can go on our homepage. We actually break down our cost structure on there as well. And happy to help, right? So if you want to check it out, you know where to find us there. Okay, let's get into the fun stuff, right? Let's talk about some good stuff here. I want to talk about how you analyze data. You see, every day on this show, with normally the closing beat, you see how I'm analyzing data and just kind of saying, hey, look, the odds are this is going to happen, probably not this. It doesn't mean it's right. It just means the odds are in your favor. So when it comes to trading, I know a lot of you do this short-term type trading thing if you're watching this show. Okay, how do we make sure that the odds fall into the dollars of your favor? Right? Has anybody ever said something like that to you before? Right? If the odds are X, right, then we want to know, okay, how do I make it so that those odds, no matter what happens, like if the odds are 70% of the time, 80% of the time, how do I make it so that that 20% of the time, 30% of the time or whatever, that I'm wrong, which is inevitable, doesn't wipe me out, and it actually adds up to a profit? A quick question that is not the main question I want to ask, but let's say you know you have a 50-50 shot of making a profit. Every trade you take, you have a 50-50 shot. Let's just say that that's the case. That's not the case. But let's say you have a 50-50 shot. Would you be profitable if you're a trader? Would you be break even? What would it be? If I gave you a 50-50 shot of winning, you know what the answer is. You can't actually give me the answer, right? If you have a 50-50 shot of winning, we need to know what the amount that you're going to win is versus the amount you're going to lose, right? You could be a 50-50 trader in the stock market and be highly successful. I mean, and I'm not just saying that. Obviously, I have nothing to sell trading-wise. I'm not like a trading course guru, but it's just pure math. If you win 2 times what you lose, what would your probability have to be? Right? So in other words, if you win 50% of the time, you win $20. So 5 out of 10 times you win $20. Okay, no problem. That's $100. But 5 out of 10 times you lose $10, you lose $50, right? So at the end of the day, even though you only got half of them right, you walked away with $50. That's what I mean by putting those odds into the dollars of your favor, right? That's how we want to do it. And so a lot of times we'll pick some data and we'll try to analyze it. I just want to show you real quick. Here is our research, one of our research tools where what we can do is we can put in any stock and say, what are the odds that something happens, right? You've seen me show this on the show before. So what I did is I just said, okay, we have, last month, this was the easiest thing for me to do. Last month, the S&P had a return greater than 5%, and it was for the month. So this just says month. And I wanted to look back through the life of the S&P and say, well, how often does the S&P gain 5% in a given month? I'm just curious. So I ran the data in here. You could also use the rolling search. If you want to be a research member, you can have access to this. If you don't want to be a client, this is one of the tools in there. I think it's jazzwealth.com/research. But yeah, you can check that out. But anyways, so that's our starting point, right? So I want to know if the market gains 5%, number one, how many times did it happen? What's all the excitement there? Tell me about that. But what are my projected stats of being successful, both now and going into the future, right? So what this basically telling us is that if the market has a 5% gain or more in one calendar month, because this is a calendar search up here, then the average 1 month return is 1.4% positive, basically 70% of the time. Okay, that's cool, right? So let me see if I can find out what did I put here. Yeah, here's actually all that data. So this is what I did. I'm going to try to go bigger for you, full screen. Hey, there we go. So all those data points basically look like this. These are all the months where the stock market had returns of greater than 5%. Last month was 7.2%. You could see very quickly it's not the best, right? It's certainly not the worst or the lowest closest to 5% return. There's been many other great months in performance out there, but there are in fact 48 times that the stock market has returned 5% in a given month. How many months between October and since the S&P started, or the SPY started back in 1993? That's our data. There's 338 months. So 48 months out of 338 months is how it gets that it's positive about 70% of the time. So it's about once every 7 months that the stock market has a month that's 5% or greater, right? You with me so far? Are you with me so far? Now, a little side topic here. I actually did this in one of our Wino Wealth classes. Well, let's say that you invested $1,000 in the S&P and you held on. You were a long-term investor, 2009, 2018. So if you just stayed invested, here's your return during that time period. This was a class we did last year sometime. If you missed the 10 best days of the stock market, then your return is significantly different, right, to the tune of $1,000 than if you just stayed invested. The argument was just stay invested, right? If you missed the best 20 days, if you missed the best 30 days, best 40 days, you actually start to lose money if you miss the best 30 days in any given 10-year period. That's only 30 days. Here we are just talking about a month, right? So I thought that was kind of cool to point out. Now, here's what we want to talk about. We're past October. So this data here, this is the return that was greater than 5%. This is what happened before. This is what happened after, and that's where this data is coming from. So we're past October, so I go, well, what's next? Let's put together a strategy. Let's say if you are someone or a programmer that looks at a computer and says, okay, I see positive returns when the stock market has a 5% gain. I see that it moves forward. It's not a winner every time, that's fine. But I see positive returns, and therefore I want to put together a strategy that says every time the stock market has a 5% month, which is basically once every 7 months or once a year, I would like to buy the SPY for the next month, right? And then I'll sell at the end of the month, because I know the next month has an average gain 1.4, median gain 1.53. So it should be a no-brainer, right? Just a simple one to put in there. So let's just say that that's your strategy. And the first thing you do is develop a strategy, right? So we're going to say 5% month or greater. At the end of that month, our trade starts. And we only trade for the next month in hopes of achieving that return. Is that a profitable strategy? Tell me. Talk to me. I'm going to let the stream catch up for just a little bit, because I know that is an issue there. So is that something you want to do? Right? Everybody's got a strategy. You got breakout strategies. You got all kinds of good stuff going on there. We wait for a 5% month. When you get it, you call your family and everybody, say, hey, next month, just for the whole month, invest in the stock market. Would you be a winner, or would you be foolish for doing that? Can anybody tell me? I see you all in there, and I know it's still catching up, so I'm giving you just a second. Hang in there. Go ahead. Go ahead. I'm just going to check my email while I'm waiting. Louis, hey, you got any emails? You want to get on some of these emails, bud? Should be helpful if you do that. What do you got? Tell me. Should be catching up now. Think about it. What you gonna do, baby? Huh? It's Friday. You see a strategy like this? Are you trading that or what? Who's got it? Someone's gonna get it right. What do you think, Louie? He looks good, doesn't he? Look at that. Look at the shine on his face. He looks happy. All right, what do we got here? I see something coming in. Okay, cool. So Alex says, sure. Yeah, why not? You got 1.4%. Yeah, that's strategy. Kirk says it would dollar cost average. That's a different way to look at it. You'd have to do it quickly, right? Because you only have a month that this is worthwhile. The stats change after the next month. This is only this month. So you would say 48 times it happened. The next time it happens, I expect something like this, and I'll do every single one of them so long as I'm alive. So I don't know how you dollar cost average. Jeff says, yeah, give me 70% chance. I like those odds. Joe's not in. Uh-oh. Yeah, winner. He's in there. I hope it's not a trick question. You see the stats. I can't trick you. Craig says he's in. I'll play it. Yep. Going to stay invested, but I know the returns won't be as good. All right. Cool. Okay. So you're like, hey, I mean, it's an honest, respectable answer. You look at that and you go, sweet. And I'm sure a lot of you type in different symbols in here. You find stuff and you go, these are my forward stats. I like it. Okay. No problem. Just remember, you have to do it every time there's a 5% or more gain in one calendar month. If you go doing, if you were to just cherry pick and you would say, in November 96, I did it, but in January 97, I didn't, you see, you lost. That was just that was a losing return. That was the 30% of the time that it didn't work right there, right? Just like a short-term trading strategy, right? You just, hey, yeah, sometimes it doesn't work, but I know the odds are in my favor, right? Well, this is where people start analyzing data optimistically, right? In reality, is this a successful strategy? Would you do this? And think of it this way. If you're not a short-term trader, let me help the long-term people as well. Let's say you came to Jazz Wealth and you're like, Dustin, here you go, man. Here's 50 grand or whatever you have. I don't know. And you're like, let's invest it. The stock market's hot. So my question would be, well, we just ran up over 5% in October. Do we really want to start investing now or should we wait? Right? The odds are, it looks like you'll be just fine, but do we want to wait? Here's where we start thinking. We have to look at what the performance after looks like, and we have to take a deeper look at that. So here is just plotting the performance. So over here, I had plotted every single positive month over 5%. So now I've plotted all the ones the month after. So black is the month after the green. So you got a performance that was over 5%. The next month, it was good. This example, it was down. This example, good, down. You get what I'm saying there, right? So we look at this and we go, okay, well, that just basically signifies or confirms what we saw on the previous page. About 30% of the time, it's down. No problem. Well, we want to look a little bit deeper there. Here are each one of the losing months. This is just as important as the winning months. So the losing months average about 3.19% is where it's at. Not horrible, right? You're taking your shot. It's not a big deal. So you can see that basically all of them, when they fall after having a 5% month, it's a decent down month, 2-3% in there. The average is 3.19%. What's the lesson here? Is it good to take this bet every time you see it? Although on the surface it looks good, it's a losing bet. Well, it's not a losing bet. It's just not worthwhile, right? Do you see it yet? Now you look at the data a little differently. I'm going to do my calculator here because I honestly did not factor this in. I did not do this ahead of time. So I'll just be honest with you. Let's say it's 70%. 70% of the time you make 1.4%, right? So 7 out of 10 times. That's 9.8, right? Well, 3 out of those 10 times, you're going to lose 3.19%, 9.57. It's essentially a wash. So even though the odds are in your favor, 70% of the time, you're going to lose you're going to have a profit, right? But it's just going to not be a successful strategy. This is not one where you would get excited and say, I have to look at this every time, right? It's a wash. If there were any kind of costs associated, which there's not really trading fees anymore, but back in the day, we would have said after trading fees and everything, it's not worth it, right? So keep that in mind. This is not for the ultra long-term investor. I'm obviously not picking on you guys, right? You want to stay invested. You now know, man. You look at the best days. You want to be a part of that. You're not trying to time it. The traders out there, you go, how could those odds look so good, but yet on a long-term basis not be that great? You wouldn't want to play with that there. So it's not really a good idea to consistently average in heavily or start new positions in the market after a 5% move. And that's horribly, horribly hard to follow, because look at the stock market. We are already, I mean, granted, it's the first couple days of the month, right? But we're already doing great. So, who knows what this pulls out. Just out of curiosity, what was the last one? April 2021, 5.29%. So we've had more than our fair share this year of 5% gains. It's only supposed to happen once every 7 months. What is that actually? May, June, July, August, September, October. It's 6 months. Okay. So, and what happened afterwards was basically just a small gain. So far for the November one, we're up 1.6%. You can barely see it off the corner there. All right, so the last 2 times it was actually positive. Back in August it was negative. We've actually had a good string, so there you go. That helps some of the stats there. But now you want to think of it in terms of how many dollars you actually make, right? 7 out of 10 times you make 1.4. 3 out of 10 times you lose 3.19. Doesn't work out, man, right? There you go. Now, with that in mind, there's no emotion, right? It's just pure logic. You go, well, I don't know. Maybe it works out. Maybe the stats improve more over time, but I'm not going to be the one to stick around and look at that because I know it doesn't make any sense to participate. There's got to be some more juice in the box there to continue to look for a strategy like that. Anyways, I hope that helps. I'll let the stream catch up and take some questions. Just thought I'd try it in a different way, for all of you that are strategists out there. Yeah, I hope you enjoyed that. For a little fun Friday lesson. Huh? And how about that Roth thing, man? Jeez. Can't they raise that, man? I know. Oh, 1.4 gain, and I don't think it would cover the times I lost. Yeah, well, there you go. Now you know. So that's obviously an old question. What did the market look like before the months with the 5% gain? Yeah, you can actually look at that too. So here's the same data that we were just looking at. When you do the research, or you use the calendar tool here, all we're doing is this first column, we should probably itemize this, or label them. This is the return, so this is any period that matches your request. It is labeled, there you go. The previous window is obviously what happened before, so if you're looking for that, and then this is the next. So really, all I really do is I just took this and went, plot that into a spreadsheet and pull the data that you want. If you want to see how many times it was negative, like I did, all of these examples here, I just basically plucked them out. Real simple, real simple. I know. Not that I want to do, but can I trade in your account, or can only you trade? It looks like you can trade, but it would cancel. Basically, if you put in an order, it looks like it would accept it, and it would just cancel when the time came around. Doc likes the strategery. Yeah, the IRA. Yeah, that's kind of frustrating. I got to give you that one. That is kind of frustrating. But that's okay. We're going to dive into that as well, so that way we know based on income, age, and account type what's the most tax-efficient way to go. So we'll play with that there. Yep. Andres wants that market to pull back now. I'm with you. I'm with you. Alex, you want to put lump sums in? Well, I think generally as a question, I think we'd all like to do that. Yeah. Not sure how to expand on that. Yep. How about Moderna? So I didn't get a lot of time to look around. I saw Boeing this morning. I was kind of digging around looking at some things. Moderna's just falling apart. I do agree with that. Yeah, that'll work. You might not be able to see it as well. I thought there were some cool things out there with the Shake Shack and Booking Holdings, a couple positions that we own there. Starbucks I thought was cool, quick reversal. We happen to own that stock, so it was nice to see that reversal. Monster's still fighting back. I thought that was cool. And Visa, where you at, man? The Visa man, he did catch the bottom. I love it. So obviously a good move there. Any options trade that you had on that one should be closer to you wanting to start to take some profit. And then I just note the semiconductors. There's AMAT. Breakout continues on that. It's good stuff. All right, good finish to the week for really a lot of different areas. Even the retail space. Look at Ross, almost back up the 200 there. It's pretty cool. Yep. Yep. You'd love the tool if you could pick individual months. Oh, like say how, yeah, that's an actually interesting, that's an easy thing to expand on, but I like that. How would that go? How the S&P greater than 5% in, we'd just have to specify it. We'd have to put a custom thing, so you could just choose the month. A little slide, what do you call it, like a slide pop out. That's a cool one, though. How often is the market up in this month and things like that? I could get on with that, man. Yeah. Yeah, thoughts gets governments from taxes. Yeah, it's like they're trying to intentionally do. Again, I don't care. I don't have $50 million in a Roth IRA, so this is not going to affect me, but it's like, who cares, right? You're just basically forcing them out of the market or out of their investment. Yep. Got you some Visa this morning. I love it. I love it. Micron's still not playing along. It had its early move first, right? And even still didn't get anything done. Yeah. So it's, I mean, you're trying. Break the downtrend here. You got earnings coming up, so maybe a little bit of quiet before that. Here's your magic here, though. You're just trying to break out of this little, come on. I want it to work. There we go. Trying to break out of your little downtrend, and it's trying. I think the lack of excitement would just be maybe waiting towards the next earnings announcement, because what else do you have? You know, what other exciting catalysts do you have? You've got everything moving nicely there. Maybe some of the people come to and say, hey, where is it? Like KLA 10 core, Lam Research and stuff. Maybe some people say, okay, in the short term, these are extended. Not KLA 10 core. I mean, you got CLAC, not Lam Research. I was thinking of a different one. It was AMAT, right? Just extended in the short term. So maybe some people come over and say, well, where can I go in the semiconductor space and try to play along? Maybe it's Micron. You know? Yep. Yeah, a video on the best way to make big purchases. Can't seem to find it. I think you got to search budget. Let's try it together here. So you go in the dojo. Let's go over here. Budget. There we go. Yep, it's going to be, you could either watch the whole class here or, it's got to be the car and the house one, right? How much to spend on a car? Yeah, type in, just use the search tool there. Car, house, budget, all of that will help you get there. Right there in the classes section. I like it. I know, right, Joe? How many people actually have that kind of money in a Roth? It's like somebody personally is like, hey, let's just go screw that guy. You know, they know who it is. Like Peter Thiel, like accidentally ran over somebody's bike or something, and they're upset with him. I don't get it, man. Live and let live. Yep. Michael, you catch up, man. Don't worry. We're here for you. Yeah. You think it'll be a bigger correction? Well, I think it'll be a faster one. How it happens or how deep it is, it's tough to say. But I think we're in that period now where pullbacks will be fast. So that's kind of what we've been seeing. Yeah? Come on by, man. Got a little shaggy tip for you here. Custom made for old Jazz Wealth. We actually have a whole bunch of them. So I had a handful of different, these have been sitting out for a long time, but had a handful of different blends and wrappers put together I thought we would have our own jazz cigar, you know what I mean? And then we moved and we got busy and I never looked back at it, so I've got a ton of them. Just sitting back there. Hey, anyways, all right, it's Friday, man. Go out there and do something. Have a good time this weekend. Get your dough straight. Set back your clocks, I believe. Yeah, time to set back your clocks this weekend. So I'll try to do the same and remember to be back with you guys on Monday to do this all over again. Enjoy your weekend. Adios.